perspective as well. Ashish Kyal of wavestrategy.com joins us for a quick check on the market technicals. Ashish, we continue to face resistance at the 78.50 mark. Any particular congestion zone on the chart that suggests that we may be able to take it out or be consolidating in that range?
Hi, the overall movement on Nifty, if we look at over past few days, price have been failing to either move on downside below 7650. At the same time, it has been failing to sustain above 7900. So I would say this is a range-bound market after a sharp volatility which we witnessed just few weeks back on 24th of August. There has been a consolidation zone which is ongoing, and within this zone, the upside resistance which comes around 7990, which is very close to the technical and psychological level of 8000. So I think this level is going to be crucial and should act as a resistance. And on the downside, 7650, where there was a gap down opening, is going to act as a support. So unless and until we see a breakout either above 7990 or 7650, I think it's going to be a range bound market, and we are currently moving in wave X. So once this is complete, then the next trend, which is the medium term trend, should resume on downside. So overall strategy should be sell on rally. So if we come towards 7990, sell positions can be initiated.
Okay, that's the advice. Still in a range between 8,000 and 7650 on the upside, but if it moves higher, maybe you should sell. Just a few stocks. Delta Corp is one which is moving with considerable strength, so that's higher by nearly about 7% Volumes are already 1.5 times the kind of volumes we normally see. And along with that, even ABG Shipyard is another chart which is moving with strength. So ABG Shipyard is now gaining nearly 4%. But Ashish, let's come to your three recommendations: Escorts, Bharat Forge, as well as Godrej Consumer.
Yes, Rima. See, the first stock on which we are recommending buy is Escort Limited. If you look at the stock has continuously outperformed. Even recently, it formed a very strong low at around 130, 132 levels and bounced back very sharply. And post that, we have seen some 61.8% correction, which can be just wave 2. And right now, we should start wave 3 on upside. So Escort Limited looks like a very decent buy with a stop loss of around 155. And the target we can expect in this stock is 172, and if it manages to cross above 175, then the more upside potential will open up in this stock. The next stock for buy will be Godrej Consumer Property. If you look at the chart, this stock has been finding very good support around 200 days average. Even recently, the fall which happened from 1400 levels found good support around 200 days average, and the stock has managed to bounce back from there. This is also the channel lower trend line support. So and the RSI has also reversed back from around 30 levels. So indicators, channel, and moving averages all are suggesting that again we should start seeing some upside momentum in this stock. So Godrej Consumer Properties can be bought with a stop loss of 1205, and the target we can expect somewhere around 1340 in this stock. On the other side, Bharat Forge is one stock where we are recommending sell on this stock. The reason being, this has failed to even go above the 20 days average. It has been constantly moving lower. Even today, it has been moving down with a strong momentum. So the overall structure looks weak in Bharat Forge, and it's better to be sell or short on the stocks that are weak with a stop loss of 1010, and the target we can expect on downside is 905 on this stock.
All right, Ashish, thanks a lot for joining in. Your disclosures are flashing on the screen.